Weekend all. Ira Epstein of Linn and Associates with your weekend edition of your metal market update. And this is for Friday, the 31st of May, 2019. Now remember, in our weekend edition, things are a little different. We look at a monthly chart, then we go to all weekly charts trying to get the bigger picture. I hope a lot of you took advantage of the charting course special we had. It ended today, so we'll see what the heck you did, but we sold a heck of a lot of them. And the big news, of course, is what I do in the mornings. And we'll talk about these morning videos because I think they help a lot of traders with ideas at least. Maybe my ideas are good or bad, you don't know. But I can tell you what happened today. You wake up, you hear that the president has threatened Mexico with another round of tariffs. Starting June 10th, a 5% tariff on all the goods. I haven't seen a list, but it sounds like it's everything that we import. And then the first of each month, so it'd be July 1st, August 1st, so on and so forth, till he gets to 25% tariffs on all the goods. The reason is not trade. The reason is immigration. The reason is that, in the president's view, Mexico can be doing a lot more than allowing photographers in, and they're watching these caravans of hundreds or 1,000 people just marching through Mexico up to the U.S. border. That is what this is all about. He wants Mexico to use its sovereignty to protect its borders to stop this from going on. My guess is the Mexican people wouldn't be against it. How you get it done? Well, he's tried everything from talking. Now the question is, how do you get the president of Mexico to enact it with his armies or whatever the heck he's got to do? We'll see where it goes. The second thing for the week was today we saw the contraction beginning in China because their PMI numbers went under 50. So the contraction has begun. Now, remember, we're still using their own data. Is it worse than it sounds? No one's quite certain. But that uncertainty bothers the stock market. Look what it did to the energy markets, because all this impacts what's going on with the metal markets to a degree. Bonds and notes. You do realize you've cracked the 2.2 level in the 10-year note. Remember we were at 3.25 a year ago? We're 2.2. The market is telling the Fed, we're ahead of you, Fed. We're pushing interest rates down. And it finally caught on in gold that the marketplace is scared. And gold came alive with it. Bitcoin began the run. You remember, Bitcoin's already trading up here at 85.45 from a $3,000 level in December almost. When we come to the monthly chart, it's still, as much as it's rallied, all it's done is it's hanging on to the 18-month moving average of closes. Still very much sideways action. And again, is this a base or a top this whole length of years that goes back? This is a long time of sideways action. When we get to the weekly chart, and that's what this is the 18-week moving average of closes, the market is thrusted up. If we remove this, last week we were still in a down thrust, sort of just moving back and forth right through here. The key was, can you get up to that 18-week average, or are you going to break down under all this and start another leg to the downside? Well, the market answered it with what I call an up thrust leg. When you come to the weekly bar charts with the highs and lows on them, you can see the last rally high was 1344. We've put in something of a floor here in the low 1260s, and the market is now suddenly going higher lows, higher highs. Bullish for the first time in a long time. The market held the 100-week average of closes and fought with the 18-week, and today it carried itself through, putting out a gain for the week that's not dramatic. It's 1.74%. But the difference here is that if you're bullish, the market is saying to you, okay, I've got a zone that's bullish. What shouldn't be taken out is 1269. What about the upside? Well, there's no key moving averages above it. You're 200 days down here, the 100 here, the 18. So you go to other methods to find resistance. One of them, the Bollinger Bands. The upper Bollinger Band's at 1328.70. So if you're bullish, you're saying to yourself, okay, that's one resistance point. Momentum has turned up. The bias is up because you're over the 18-week average, and the trend is up. Therefore, this is a shot for the bulls. The bears, they'd have to break through the 1269 to try to take control back. And even then, they couldn't with that number. You'd have a higher high and a lower low. So right now, the bulls took control. They did the same thing in the GLD ETF on the weekly charts. Higher highs, higher lows over the 18-week average. Momentum up puts into the target, if it's going to go there, 125.55, the upper Bollinger Band, support in this level. And again, the bears can't wrestle control. They can stop the bull momentum. They can put the market back to neutral by taking out last week's low, and that low is 119.83, or they can stall the pattern. When we come to GDX, hasn't yet joined the others in the bullishness. It's got the higher lows and higher high, but it ran to the 100-day average and just the break came on. It couldn't get through those two numbers. Yes, momentum's up. It could follow through next week, but it's in a resistance zone in the market. I'm going to call this neutral. Why? While the trend is up as defined by the swing line of higher lows, higher highs, you're under the key averages, therefore the bias is down. The gold-silver ratio continues as it does on the daily charts to just not favor this. You just keep moving higher, which means each of these numbers represents how many ounces of silver in a perfect world you take into a store to get an ounce of gold. And you're up to 89.66. In silver, what the market did do on the weekly chart is it rode the lower Bollinger Band and it had an outside week up. So it's the first sign where the market's trying to say, okay, maybe this 1420 area's got some support. The problem is momentum didn't turn with it and the swing line is down. It's just a reversal. Should you take out this week's low, this coming week or the week after, it'd be what we call a bull trap, and you probably go down for even lower, run with that band a lot lower than that. I use the word a lot, I don't know, but that would be my guess. In the copper market, you fell back to the Bollinger Band and you're trying to hold that general zone. Now seeing China's PMI come out in contraction is not beneficial to this market. You have a higher high, lower low, it's going straight down from all the way up here, around 299.5. Now you're down 33 cents to 260, 295. That's pretty big break. In platinum, to the downside. Lower highs, lower lows, momentum down. Palladium market, neutral. You've got the swing line, higher lows, higher highs, but you're under the 18-week average in red, and momentum still pointing down. Just a neutral chart. I don't see much more. And in the dollar index, I see the market in a key resistance point. That's not bearish. It's a resistance point. The dollar today set back a little bit. For the week, though, it's up a quarter of a percentage point. The resistance is that upper Bollinger Band. Depends how bad things get out there. You know, people run to the dollar in times of uncertainty, but where they run more is the yen, and that's what they basically did. Now, in the mornings, what I do is I wake up, and by 6:15 in the morning, I am recording for you, and I'm not in that recording. I've got my headset on, and I'm sitting there, and I'm bringing you up to date with the markets. This is how my charts are going to look. They're black. They're going to have more studies than you have here, more moving averages, window envelopes, a lot of different things that you're not used to me talking about. But that I use 5 different elements in my charting course, and I reinforce each element here. So you're going to have your cup of coffee, ideally. You're going to sit back. And these are the markets that we cover in the sequence that we cover. Now, the beauty is you can take your cursor, just move it at any point over this. It's going to light up with the name, metals. It'll light up with interest rates. Wherever you're at, it'll tell you so that you don't have to guess, where's this that I want to pay attention to. There's also a lexicon on this side. Click it, it'll take you right to that section. We make it easy. The idea of this is to bring you up to date with what's happened overnight, to talk about the charts, because remember, with electronic markets, most of the markets are up and trading, and where are things. What I'm able to do also is, unlike here, just talk the generalities of what the market is with about 4 studies, I can talk here, buy here, sell there, do this. I want to see you go long at the market, short at the market, put a stop on the market. And the reason I can do it there is this requires a subscription. This is hidden behind what? It's going to be hidden behind a user ID and a password that's unique to you. So it can't be passed around. We lock it down in a certain way. And yes, it'll play in the mobile app that you get as a subscription with it. You can play it on your computer. You're going to get a message that tells you that that it's out, it's ready to be viewed. And typically it's ready before 7 a.m. Central Daylight Time. To find out more about this, go to our website, www.iraepstein.com, under Research or Education, Morning Subscriber Video. If you haven't tried it, it's 26.5 cents a day for 30 days. Not very much money. You don't have to like it. You can stop at any point. There's no contract. You decide what you want to do. If you want to go month to month after that, it's $15 a month. And a lot of people just buy the 1-year subscription for $13 total per month. It's $156, so you get another discount, and that's one way to handle it. I'm Ira Epstein. You have a good day. I will talk to you all Monday.